The maximum amount you can borrow depends on a few factors, mainly your level of income, your committed expenditure and your past credit history. So what we do is we have a no obligation meeting, taking into account all those factors, and we can do some calculations for you. The most important part is though that you can afford the monthly repayments, so you just want to make sure you're not overstretching yourself. It's a long-term commitment. We look at various forms of income as well, so you may feel if you're self-employed you can't get a mortgage due to your salary and dividends haven't been particularly great, but we can look to use your share of net profit as well. We can also look at benefit income, child benefit, child maintenance and even pension income. If you're a first-time buyer, we can assist you with that from start through to completion. It can be a very daunting process and prospect. You might not know how much you can borrow. You might not even have a deposit or a large enough deposit, but there are a few schemes available for you, perhaps help with the government schemes, the Help to Buy schemes, help with the deposit and even a shared ownership property. There are new mortgages available for family assist mortgages, where a family member can help you either with collateral in their own property and equity, or cash in an account held for a deposit for you. So there are options there, so all may not be lost if you feel you can't get a mortgage. So there are various schemes out there, so it's worthwhile coming and having a chat with us and we can see if we can help you out. We can also liaise with estate agents and vendors and solicitors for you. So a lot of the time as a first-time buyer you have to have something called a decision or a mortgage in principle before they'll even allow you to go and view a property. So again, come and see me. We can try and get you the mortgage in principle to get you foot through the door anyway. Well, each lender has their own specific set of lending criteria. So you may not fit each lender depending on your own circumstances. It can be a minefield and really time consuming to know which lender to approach. That's where we can come in. We know the lenders, we know the marketplace, we will research it and we find the correct lender for you based on your own personal circumstances and your needs and your preferences. You may feel you can't get a mortgage at all due to maybe adverse credit, CCJs, defaults, late payments. There are lenders out there specifically that will take those applications on. You may, if you're self-employed, especially in recent COVID times, you may have been struggling with profit recently or perhaps received the government bounce back loans. We can look at that for you. We can take into account your net profit or your salary and dividends, so there's workarounds on that basis. You may have been employed and had recent furlough income, but again, the lending criteria is changing a bit and lenders are getting a little bit happier to look at these applications, so it's worthwhile getting in contact to see if there is a mortgage that's right for yourself. Absolutely, yes, and it's really important to do so. If you have a mortgage, monthly liabilities, dependents, a family that rely on you, yeah, it's really important to review your circumstances. So you may already have life cover in place to cover your mortgage, which is great and is important. However, there are other circumstances that are more likely to happen, such as you being unable to work due to accident or illness, or you were to be diagnosed with a critical illness. With the advances in medical care, you might actually be alive for many years after you've been diagnosed with a critical illness. So you may not even be able to ever go back to work. What would be the implications for your family? How long would you be able to remain in the house? For example, the average age for claim on a critical illness policy is age 49. And if you imagine how many of them still have dependents living at home or a massive mortgage debt. So it's a really, really important cover to look at, to have a lump sum payment to you in that scenario. It would just really help out your family and possibly means that you can remain in your home. Another form of important cover is income protection insurance. So this can pay out a large proportion of your income if you were unable to work, and that can just be due to sickness or illness. It doesn't have to be as severe as a critical illness policy. they can also have various payout periods, so it can be short term, a year, 2 years, or full term, so until you retire or you go back to work. So again, a really important form of cover. It can be tailored to your budget as well. Life cover and insurance policies have dropped in price over the last few years, so it might not actually be as expensive as you think. So please do get in contact. We can give you again a non-obligation meeting, find out exactly where your shortfalls may be, and provide you with some illustrations for you to have a look at. Your circumstances may have changed from when you originally took out the mortgage. You may be able to get a cheaper rate if you were to remortgage. You may want to make some changes, either by reducing the monthly repayment, by actually increasing your mortgage, releasing some equity, some capital from your property. Perhaps you maybe want to do some home improvements or provide a deposit for a child to get on the property ladder. So it's definitely worthwhile for us to have a look. If your rate's due to expire, or it already has, so you're on your bank standard variable rate, which would be a pretty high rate of interest, it's certainly worthwhile coming to see us. We can have a look across the marketplace for you, see if it's better for you to stay with your own lender, if they will provide you with another fixed rate, or if it would be better for you to remortgage away elsewhere. But there could be lots of options for you, so it's definitely worthwhile having a chat with us. So there's a few ways that you can help a family member, child or grandchild, get onto the property ladder themselves. Either you can gift them a deposit if you've got some savings. You can raise capital on your own property, or use equity in your property as collateral as well for a deposit for them. You could even actually go on the mortgage with your family member as well. So there are a few options there. But yeah, absolutely, come and have a chat with us.